Ladies, gentlemen, thank you for your patience. We struggle on. We struggle on with the technology that is. Google Hangouts supposedly interacts and does the live bit and supposedly streams to YouTube. It doesn't work. Nothing works. We've tried so many times. We tested before. We thought we had it. But guess what? It still doesn't work. So I wanted to do a screen share. I wanted you to see it all. I want the best for you. I want everything, but no, it didn't work. So I'm going to have to make up for Google's folly. And I hear they're sacking Hangouts and all of this nonsense, and they're going to throw it out, and I expect something else is coming. But I see you are making it. Remember, please like, please share if you think we're merit-worthy. And of course, little announcement tonight, 1900, 7 o'clock at GMT time, 1900 GMT, a webinar on, yes, flying with the bears. How do you fly with bears? Bears don't fly. In the shorts, will there be shorter seasons? How to defend what you have and how to make on the short side. What am I doing here, though, and what is the topic of this? It is what Bitcoin will do next. That's my take. Of course, that's only an opinion. I haven't got vision into the future. No, I'd love to have, but I don't. But I do have a probability-based assessment on typical price behavior that often turns out accurate on probability-based scenarios. So remember, that's only at times where you get a couple of clues and it gives you a little bit of a hunch that something's going to go down. And actually, it's given some clues. So I'm going to read those clues and I'm going to tell you what I think is going to happen next. And then, because of this awful environment where we're supposed to be showing you some charts and we don't, I'll do a real short summary chart YouTube where you won't see my magnificent complexion. You'll just see the chart, and I will draw on it with this here beautiful stylus and pen. Yes, courtesy of Microsoft and a Surface, and I will draw for you what I think will happen next on BTC. This is what we do almost daily, sometimes twice or three times daily with my crypto premium guys. Scenario casting. So why do I use such a weird word? We created that word, copyright pending. Yes, scenario casting is the practice of thinking forward for what might be. The practice of thinking forward for what might be in price behavior. Because actually, I had to click that switch in the brain. It wasn't something I did. I wanted to trade. I just wanted to see which direction the market it was and charge after it when it was going up and charge downside on it when it was going down. In short, I was a reactionary. And guess what? You always late when you are a reactionary. There's a little mathematical formula. It's part of my new content that I'm going to be doing, releasing, because that's getting really big. The plan is great. We're going to have an incredible next level of self-study. But what I actually say is, you're always late, and it's a popular YouTube that some people have enjoyed, but this one is going to be really, really interesting. The fear of loss, when that ceases to be larger than the fear of missing out. So the minute that fear of missing out equals the fear of loss, and then ticks a little bit higher. You think, there, it's going. Yeah, I'm not making money and others are. And you now say you're no longer afraid, and in fact, you charge. You see, you're trying to turn a probability-based game into a certainty. In other words, I'll wait till it's actually happened, then I'll run it. But then what you think is happening often is just a short move that pulls back. So you always end up late. The key thing is you've got to have a method. If that level's run, then that. And that is the difference. Anyway, so Bitcoin, what do we think is going to come next? Well, we benefited from that final little spill, and I can tell you there's a couple of things going on. I have to draw with my hands. It'll get better when you see the charts, and you'll be able to understand what I'm saying now, and then when you see the chart, you're going to say, it all makes sense. Okay, so let's draw nicely with the fingers in the hands. So Bitcoin, long 6,500 squeeze, super low volatility. This is the big time frame daily, smashing it down, smash. Lows round 3-2. A little bit of pushback on the way near the end after it capitulated really hard. Rally spike quite strong. hitting around the 4.8s, I think it was, level, or 4.3s, coming from 3.2 to the 4.3s. That's right. So about $1,100 bounce. A snapback rally was due, yes? So we're still on the daily chart. You can remember the big squeeze, the 6,500, 6,000 Dunkirk levels that I said would fail. HVF method said would fail, not me. Oh, that's so egotistical. I apologize. Humble before the markets. HVF method said, and we happened to be benefited and traded it. So that's what happened. Down she spelled. Then we got this $1,100 rally to the 4.3s level. And then since then, we've had what's called staircasing. I call it staircasing. It's a grinding up. In other words, no longer so strong. Up the slippery slate mountain pass. Oh dear. And then suddenly skid. And you fall. And then you have a steep fall. And then the rope jerks. And you get a little bit of whiplash. And your buddy's swearing at you big time up there for not digging your nails into that slate a little deeper and hanging fast. And then you start clawing your way back up. But now you're a little bit more exhausted than the time before. And it's the same slippery slate, and the sleet and the snow is still raining. So that's what's happening. Another weak little grind. They gave perfect little fractals. I did a YouTube on it. They were very, very similar. A little pinch. Traditional technical analysts would say symmetrical triangles. We call them disproportionate weak HVFs that should not be traded to the long side because we have a macro bear bias, and that they would probably fizzle. And what ended up happening, they'd get a little break, but they would never make their targets, and then they'd fall and then capitulate again. So this is your climber falling even lower, and each time an extra climber is being pulled off. So there were 5 of you in the climbing, tied to each other by rope, and the first guy fell. Next time he's pulled 2 guys down with him, and now they're both having to climb up, and the other 3 are taking even more strain. And then the third time, wow, there's only 2 guys left, and he's holding on for life. So that's kind of what's been happening. So, but the whole structure from that 4.3 has been falling wedge, yes? A falling wedge. So we're pinching. The wedge is like that. In other words, they both head down. Both of my arms are pointing down. Just the gradient is lower. So you've had the bounce to the top, grind to the top. Then you have the capitulation to the bottom, slowly climbing back up to there. A capitulation to the bottom, slowly. So there's a squeeze in the downside move, which portrays the potential, yes, you're going to hear it, the potential for a pop to the upside. Now, this is all on the daily. So we've got the big 6.5, the capitulation slowly hammering out the low to the 3.2, coming back up, and then a falling wedge down to here, getting quite low, but not as low as the original low, exhaustive low. So we have this sort of fast up, slow in a staircase down with grinds and capitulations all the way through. So that's kind of where we're at on the daily. Now, right now, we change the time frame. Let me just get the accurate time frame. Checks browser on PC and talks to the people about the new time frame. So if you focus on the 15-minute or the 30-minute, some may say of traditional technical nature that you have a kind of an inverted head and shoulders with an implied target. They could be correct. In other words, a neckline in and around the 3,500. So what we said a while ago to you is 3,500 and 3,550, the new Dunkirk levels. In other words, they were finally let go and you've collapsed into them, and now you're coming back up. And actually that neckline is around the 3,525, 3,520, smack in the middle of the 3,500s and the 3,550s. So you have a reversal pattern in there, and but inside this, so we're on what time frame did I tell you? 15 minutes and 30 minutes. So if some of you are watching this and you have a browser on BTC USD, doesn't matter which exchange, they're all pretty similar. The numbers may vary. I'm typically on Bitfinex, but I've Kraken, Binance, the whole lot, and you're all in there as well. So have a look at it on the 15 minutes while I'm speaking. So what's actually happening is it's not exactly mooning, but it is moving up. It's inching up. And what's it doing, like a lot of what's happened, is actually you're getting, apart from your inverted head and shoulder, like that, with a neckline, you're also on your up leg since that low, getting a small rising wedge. A small rising wedge, like that, both my arms are pointing up, inside from the bottom of the big falling wedge on the daily to the top of the other side. Who understood that? Man, this guy's confusing. Yeah, let's say it again. So you've got your inverted head and shoulder, and you've now broken above that neckline. But actually, the structure from that low point is the head, all the way to your up move is not so super strong. It's in a rising wedge that's gone from a broad base at the bottom of the big daily falling wedge to the small fractal of a rising wedge to the other side. So what does that imply may happen? What does that imply may happen? I have a probability scenario cast. I share scenario casts with my premium guys all the time. And once a month, when we do a webinar, I like to share with you. And they will be on here. So check out my main man, Bernard. There's a link for you if you want to attend our big offer tonight and find out more. But let's tell you what I think is going to happen. So that rising wedge inside the falling wedge, so a bit confusing, but rising wedge inside the falling wedge from the base, working its way up to the top. What will happen? A small nose out of the big falling wedge and then a dip down. In other words, it's grinded its way up. It's a little bit of a slate climber. It's a little bit of a tiring rock climber that's going to have a bit of a relapse and a sink into the bottom of his pants, let's say. So what will happen is, up she goes, meets the other side of the wedge, maybe sticks a nose through. It's kind of like a child wants to put a foot on the other side of the line. You know, there's a line in the sand. What you going to do? Pops its nose out, gets a little slap in the face, and rolls back into the falling wedge. So you will actually have a push up and a final little move through the falling wedge. This is the big daily one. Remember, I'm talking two different time frames, the big daily macro falling wedge, and inside this on a much smaller time frame, we're crossing from one side of the wedge to the other in a rising wedge. Boom, we stick our nose through, we have a little dip down, and it'll be a kind of a little short, sharp slap. Down she goes. But what I suspect will happen this time as we are approaching on the daily again, the previous low, but not quite as low as the previous low, because that low was 3.2, and I think we traded only as low as 3.4. Let's go back and do a quick fact checker. We only had the lowest point 3.425. We may have one more point where it goes lower, but I don't think that's on anymore. I think we're getting close to the point where we will have, after that short spill on the rising wedge, a little bit of a break out of the bigger wedge. It might be this time when we fall out of the falling wedge, a dip down, and then boom, break up. Or there might be one more cycle. It might squeeze one more time a little bit lower. So it could get into the upper 3.3s, for example. The previous low was at the 3.2s on the absolute low. So there is space for one more, but I'm not sure that's going to happen. I think our little rising wedge, slap down, and then we pop out the wedge. And then actually the bulls are going to get bulshy again. They're going to get confident again. I'm not sure they're going to get as confident as last time, and I don't expect the move from 3.2 all the way up to 4.3 to be as strong. We had a good spurt up with real momentum during that period. We had a good spurt up with real momentum during that period. I stood back. I don't trade bull until the bear is over. And since then, we've been taking the staircases down on the grind, staircases down, which has brought us all the way 60-75% of the way back, which is not bull market. When you get a move to 4.3 from 3.2, that $1,100, you should not be giving 70% of that back and find yourself at a low recently of 3,400. That means you've only held on to $200 of $1,100 move. But you have to acknowledge that the manner in which we came down was slower. It took a bit of up, took a lot of exhausting of the bulls for each successive slap down, while the pump was up quite quickly in a short time. So the momentum of the up legs versus the down legs is still with the bulls, but we are in this rally phase. So we'll check the next level of momentum, and my suspicion is that up leg will be less zealous, but it still has the power to go fairly high. Guesstimation, and this, by the way, could be entirely wrong. I'm giving a lot of detail here about something in the future. Please understand, this is just through experience that it sometimes happens this way. It doesn't always happen this way. So it's speculation on my behalf. The next push move that of a reasonable scale could take you from the 3.9s all the way up into the low 4,000s in its next move, but not as high as the previous high, which was 4.4. That's my guess. So somewhere between 3.9 for 150, I've allowed for about $250, you will have another turning point down. So that's quite a way up. Now, if you look at where we are now, we're at 3.5. I think we've got potential to spill down to about 3.50, 3.4s, back into just if we have just one more leg with a spill down before we break out the wedge. Potentially, there's a reasonable move there. Do I want to trade long BTC yet? Generally, no. But because it's a reasonable amount, I might be tempted, especially once I see it. Now, where you get a real gift is if you get a little upside squeeze, and I'll draw that on the video that'll follow this one with the chart sharing. I was meant to do this live with chart sharing, trying to broadcast live with chart sharing and showing your face and using Hangouts, integrating with YouTube Live. Excuses to kingdom come. Just can't get it to work, guys. But I understand they will be better. They will do this better for us in the future, and maybe we'll get better too. So a little fractal for an upside move could tempt me in to an upside move that could run for a few $100s. That is the position. What does that mean longer term? Because you're all interested. It's quite tactical what I'm discussing. A little drop here for $50, $100. Take you from 3,550 maybe to 350, 200 there, and then maybe 500 to the upside. Yeah. But what about that big picture? Well, I'll also mention that in the charts YouTube that I'll do to follow this. But all in, I suspect the upside momentum will be not so powerful, and that will have a moderate down leg that might be a little more brisk than the down leg we got. In other words, we're going to start rolling the momentum legs back to the bearish side once this is playing out. That's my probability view. If we come absolutely ripping out of this wedge and it's extremely powerful and gets almost as high as the previous high, and it's an even stronger rip up, I'm going to be open-minded to, hey, maybe this is going to be an overall pattern setup that could be bullish. But I don't easily call first patterns in a new trend, and we have a large macro view on the other currencies that still points to the $1,000 being breached on both the pound and the euro, and getting pretty close on the dollar for Bitcoin. So that remains a bit of an ogre over the Bitcoin market that is leaning on it. And until that's been absolutely put to bed that it can't happen, we get really strong momentum and setups and big moves, and we start running out of time, and we start getting lots of reversal structures on bigger time frames. That ogre is remaining there. He's got a big bloke with a baseball bat, and he's standing at the door. In short, we ain't getting through there until a whole bunch of stuff has happened and he's been moved on. And that's how it's standing. So going back to this overall, this big upside move, not so big, but the reasonable upside move and the slow falling wedge down on your daily time frame, what would happen next? The second impulse, but also coming most of the way down, maybe a little bit brisker, but generally calming down on both the up leg and the down leg, not as pumpy on the upside and moderate to the downside, and then a third impulse. In other words, a new continuation pattern setup. A new continuation pattern setup. Remember, the geometry that we get from that low at the 3.2 is going to be still fairly significant. It's an $1,100 move from that first low at our absolute low for Bitcoin since the 6.5 break to the rally high at 4.3. It's a better part of $1,100, possibly $1,150 all told. So if you have an $1,150 leg, we could get a very nice setup. So if we get a good second impulse, we might look at that secondary high as it's rolling over. We might look at shorts there, not only just for riding the down leg, but for the fact that this larger pattern may come. That's how we think. We're scenario casting what might be. And if we get any behavior or anything that doesn't represent that our scenario is occurring, and we have many scenarios, one that could see it just melt up right now out of this falling wedge. It could, out of this falling wedge, just peel off the roof down. It could also just pump and run well past the previous high. in a very quick succession. So the market always retains the ability to shock you, but generally in these situations where we're getting the micro wedge that's rising inside the falling wedge, I've seen this before. I do the similar drawings, and what happens is when you keep looking at the same thing and you try organize it and structure it, your subconscious mind keeps taking snapshots and you start to get a little more accurate. That doesn't mean you're awesome, it doesn't mean you're a guru, and it doesn't mean you're a god, and you still will get loads wrong. That's all. But you just get better at probability assessments for what may come in the future. So one of my big goals, and what I would suggest to you as traders, is whatever you choose to trade, practice becoming a forward-looking scenario caster. Why do I say scenario caster instead of forecaster? Because there's an English word already for it. Because a scenario is not something you're committing to. A forecast is a commitment. If you say, I forecast rain tomorrow, when it doesn't rain, everyone points at you and goes, you were wrong. And actually, scenario casts should never be singular. You should have multiple scenario casts. If you only have one, it's just a forecast with a different name. So we have multiple scenario casts, one where it goes up, one where it goes down, one where it does a moderate in the between, and then you talk and allocate probabilities to the different models that you prepare so that you have the best understanding and you maintain mental neutrality. What I've described is my highest probability scenario cast of a few. I've also just referenced great strength and peeing off the roof to the downside. There's a little bit more that can be done with that detail-wise, but I'm just here to tell you about one particular scenario cast of many. So that's how you want to frame thinking. Be a price behavior futurist. Try think what comes next. The seeds of tomorrow, or let's just say the weeds or the plants of tomorrow, are often there and present in the seeds of today. If you can read the seeds of today, you can get an insight of what harvest is likely tomorrow. And there's more clues than you realize. And that's why I spend the time charting what I do. And I will do a follow-up short chart vid with a scenario cast for you on that. And these are the kind of looms that we like to do for our premium guys. Trading is not for everybody. If you're interested, though, there's a free webinar. There will be an offer at the end. It's straight up. It's simple. And if you just want to come and just listen to the webinar, be my guest. We don't mind. Trading isn't for everyone. If you choose to engage, it's great to have you. So watch out for that link. Otherwise, please share and like, and I will do a recorded free view vid for you at this one unique event. I generally like to do at least one a month, and you can see how it works. And we could well be wrong, we could well be right, and we will be adjusting our opinion in the premium area as the news comes in as to what scenario is more likely. And that's the privilege of just doing a scenario cast. We don't invest in it. We don't get too ego invested in it. We have others, and we swing the odds all the time as they change. Let's see what some of you have said. I've done a lot of talking. Are there any questions? Top chat, it says in my top right corner. Who's the top chat? Live chat. I don't know. I'm not seeing anything in here. Nobody loves me. Nobody wants to say hello. Oh, here they come. Dewald, hey, big smiley face. Yes, indeed. Welcome, Dewald. Great to see you, buddy. Yes, please. Johan, lols. Jeffrey, it's crazy, this channel. It has it's only it's 15K subscribers. I'm not sure if that was he thinks it's too much or too few. I'm hoping it's too few, Jeffrey, and you're going to help us grow it, but maybe you think we're awful. Cryptos, YouTube best kept secret, says experiment like a mad scientist. Steve Chattels, love the free content. Good stuff. Thank you. Thank you. What's up? Says Izar. Yes, hearty what's up to you as well. That sounds sort of friendly. BTC has bottomed or not? So we are suggesting, so just a straight up question, Roberto Natari says, BTC bottomed or not? So the scenario cast I've just described is actually not any great progress in either direction for a while. In other words, I'm calling for now a possible relative low soon where there could be some upside move, but nothing spectacular. I don't suspect it's going to take out the previous bounce high and then further oscillation in that declared range, tightening actually, and potential to get boring. And I know you hate boring almost as much as you hate bear, but boring sometimes sets up exciting later. You see, that's the game. It's a bit like war. It's not permanently full on 100%. It's boredom and then sheer skirmish and mayhem. And that's what's going to happen. And get your act together and get your view together during the boredom, because then you can set your traps. You can put your claymore mines for the price behavior. You can put your wires down. You can polish your rifle. You can make sure you've got enough ammo. That makes you prepped for when the mayhem comes. And the mayhem catches most people by surprise because they are reactionary. So that's what I'd like you to take away from that. And thank you for your question. Johan Buerta, great to see you. Johan, how is it going? A long Morningstar daily candle to 1200 would be a wet dream. He likes the idea of that somewhat, I believe. Arabic courses, I always follow your video and share with my group. Love it. Thank you. I appreciate your support. And I thank you for that. Crypto trading, got enough enema? I don't know. Hi, Francis. What's your assessment on BTC bottom time frame, month, year, or 2 year? So, Alan Cerezlia, hope I got that almost okay. He's asking time frame. Now, the key thing with time frame is it's a very difficult thing to give an answer to. We get short-term information that's accurate, and we have long-term information that's general in price behavior. So our overall pattern has quite a long time for that 1250 down scenario, which is possible. And it has a lot of time to do it in. And in fact, most cases we overperform. Bobcat Cannon, looking really forward to seeing you in Acapulco. And in fact, we'll be doing a workshop there where I'll tell you how to prep. Little sidebar, that question just triggered me, and I'll come back to what I was just talking about. Bob, we're going to do a workshop there, how to ensure, are you reset ready? In other words, this is going to get into what you should be holding. I'm not a financial advisor. I'm not regulated. You can take it for opinion only. You will have me in the room. If you're at Acapulco, I'm going to do a 2-hour workshop apart from being on the main stage with the big speakers for half hour. So I hope you can get both. The workshop does require a small payment, but you will also get a trading day with us, which will include a 90-minute traditional markets and a 90-minute crypto markets on the next March the 1st, I think it is, non-farm day. So we'll see the non-farm number in for the dollars and the equities and all that, and you'll get that. Plus a mini-series course, and you will also have the first 50 minutes just about how I would do general preparation for reset. What I think is coming. So the scenario casting I'm talking about, I don't just do this for price behavior. I'm passionate about futurism generally. So I read news and I say, where are these guys going? This is a step in a direction. You see, some people see everything as just this abandoned alphabet soup of randomness. And for those that see life and everything that's happening around them as an alphabet soup of randomness, you're never going to get any wisdom. Those that see that actually there's agendas that are being pushed by control structures and directions that are being taken. Simple example that I'll talk about. Alexander Ocasio-Cortez coming out, Bernie Sanders probably getting a second run, de Blasio, all the money's in the wrong hands. Miss Warren of America, you never built that. We should confiscate money from the rich. I am seeing and predicting that this is not accidental. These people are being given voice through the mainstream media. They are getting a disproportionate news feed. There is a reason for that. The left is about to bite back in an extreme way. 70% marginal tax. You think, I'm okay. It's for guys with 10 million. Never mind. Let them go take some money. I'm cool with that. No, my friend. It's like when the one crab, this is crabs in a bucket. People turn on each other. You should be turning on the control structure. They will do it. The original super tax in the UK that was brought in was for the supreme wealthy, a decent cop that's got some level of rank and been in service for 12 years today, now is paying super tax in the United Kingdom. Top-end sisters that have been 15, 20 years in the NHS are now in top-rate tax brackets. That top-rate tax bracket was brought in many years ago to affect a fraction of 1%. It's your new reality for you, buddy. It's your new reality for you. It's a thin edge of a wedge. That's what it means. Thin edge of a wedge. We were talking about wedges earlier. This is a different kind of one. I get my foot in your door, baby, and I'm burgling your house. That's how it works. Don't let them get a goddamn foot in that bloody door. So we'll be talking about that, the lefty backlash that is coming, the asset stripping from wealthy people, the tax extraction. They are bust. They're going to be reneging on so many things. This is what's coming. It's an ill wind. Which way are they going? What should you do to defend against that? People can predict it, but many people can't give you join the dots for you and say, where should you be going? We're going to go into that for a full hour. Then I'll do a market assessment for 45 minutes in the room with you with screen laptop. You won't have to put up with this Google Hangouts non-happening mess and follow up with a chart vid later. And I'll be available for 25 minutes Q&A on anything you want to ask in person with a floating mic, good setup. We booked a room. So if you're in Acapulco, come and join us. Anyway, back to time frames. The patterns dictate time frames by when they should occur. And once they haven't occurred, that means they're not going to occur likelihood, and that means you're going to get another move in the opposite direction. So at the moment, our 1-250 is good, and we're holding for it. Reset sniper in Venezuela. Yay, come on, Venezuela. I've seen the WikiLeaks documents being released on US and Venezuela, and I'm disgusted with all that goes down there. Blessings to the people in Venezuela. I hope it works out for you. So buy gold and silver and wait it out. Now, there's the thing. One of the aspects of my big game is everyone, the simplest advice they get is buy gold, silver, and crypto. Actually, you need to buy gold and silver at the right time, because when everything deflates, the gold and silver goes down first before it goes up. You need to be slightly more nimble. We are in the end of cycle. You don't invest for the 30-year anymore. You can't do that. That's the traditional cycle. 30% in high growth stocks with good balance sheets, 30% in bonds, 30% in property with interest rate. That's great advice. It's not generally bad advice. At the end of cycle, when you have financially engineered property that is with indebted banks and indebted consumers and indebted corporations, and you're going to have a major liquidity shakeout, these guys know the way they get you out of their homes and turn you into tenants in your own goddamn home is through volatility. They spike it down, shake you out, pick it up. The hedge funds own it and are the new landlords. You get to rent your own old home back, and you never own it again. Goyim out the land. Goyim out the land, and you will be a slave in your own home in a control structure. That's the game. They introduce the volatility. You need to be out in cash. You want to then buy at the bottom the gold and silver. It matters. In 2008 and 9, guys, gold went from $1,035 to $681. Do you want to buy at 1,035 or at 681? Do you realize you'll get 80% more gold if you buy at 681? Do you know if you bought silver just before in 2008, it traded $21 and went down to 8? Would you have wanted to buy at 8 or at 21? You know, you get close to 2.5 times more silver if you buy at 8. Everybody just says, buy gold. You're gonna watch it lose 30, 40, 50, 60, 80% possibly of its value before it comes back and does an X. This is a sinking stepping stones game. You have to know when to jump from which stepping stone. This is what's going to go down. It's only for those that are nimble and have a plan and have an idea. Most people buy and hold, you're going to get shaken up, you're going to be shaken down, and your gold will go down in value just at the time you lose your goddamn job and the credit card company is knocking on your flipping door and wants to up the interest rates and says you haven't made the payments. You'll be a forced seller at the bottom. You would have hodled through ups and downs. They'll pick it up on the cheap and you'll watch it fly after you have no more of their fiat left to buy it back. That's the game. Good trades, good positions get shaken out when they squeeze everybody's liquidity in every possible way. Mortgage goes up. Think now, if your mortgage goes up 40%, your bond payment on your home. Think now, if your credit card goes up and companies retrench. Think now, if your banks withdraw all liquidity and call all your overdrafts and any debt you have in all simultaneously. Think now how you're going to buy and hold that gold when you've got bills to pay and your child is looking lean and skinny and wants a meal. You don't. You get shaken out. Great traders get shaken out in institutions at these key moments. Even institutions become forced sellers when the liquidity juice is taken out by the central banking cabal. You need to know how to dance, baby. You got to learn to dance. These guys are going to be pulling caps off at your feet. You got to jump, baby, jump. You got to know which way to jump. You got to be quick, and you got to see it coming, and you got to be cash rich so that you can act. This is what you're going to learn on Acapulco with me, and this is what it's all about. You got to prepare, understand. Timing is everything. Buy gold at the right time. Buy crypto at the right time. Sell crypto at the right time. Sell crypto not at $1,000, watching it fall from $20,000. That's the key element. It makes a difference. Entries matter. Entries absolutely matter to the multiple that you attain. And I know that, and I need people to understand it. It makes such a difference in trading. We want to be in just in time at that key moment. You don't want to pay more. It's all about risk reward. It's all about getting that risk pinch real tight and boosting that reward. Okay, I've overextended. I'm getting into other topics. I thank you for the truth. People will go Bitcoin in reset. Well, it could go down first. My view is that crypto will go down first when there's a liquidity squeeze. Anything will just be hunting cash to meet bills. Learn to dance, learn to jump, baby, at the right time, he says. User BLK. I love those words. I heard them recently somewhere. They must be amazing. Anyway, I'll not do a demonstration of my version of dance. You might think it's a comedy channel, but I'll speak to you at Acapulco. For those of you that will be there, looking really, really forward to sharing the stage with some David Icke is going to be there, Doug Casey, Mr. Morgan of Silver and Golds, Ron Paul was there last year. It's great. It's a great event. Go in and enjoy it. If you haven't bought tickets, come on over. It's great weather there. It's cheap once you're there. Come on, a couple $100 ain't going to kill you. Get out of wherever you're at. The US guys, come on. I don't get to come to you as often as I would like. Come on down and see us. We'd love to have you. Anyway, so with that, I say goodbye. I'll do a short charting vid after this just to summarize all that hand drawing, and you'll be able to see exactly what I'm suggesting may happen. Remember, I could absolutely be wrong. I've given a lot of detail about something that's in the future. It's not about being wrong or right. It's sharing an idea. But sometimes every now and then you get a higher probability event, and I've kind of seen this kind of movie happen before, and it often plays out similar. So you'll see if it was accurate, and you'll see if it wasn't, and that's all okay, whatever happens. It's about understanding. If it deviates, I know then, okay, you're saying you're not so weak. If it goes softer, then I say you're really showing me you're weak. It gives me a guide as to where I should be on the market. With that, I salute you. Au revoir, au revoir. Bon appetit. If you're having your dinner like me, I'm being called and summoned. Steak. Yes. Okay then. Proper South African. Cheers for now.